Alright, what's going on, y'all? Today is August 3rd. It is a Monday, and I want to go over the trade that I took that allowed me to capture this move that you see here. It was over 130 points, one execution only, the entry down here, and then the exit. And you see price goes way beyond what I targeted in my trade, but I want to go over just being able to capture a portion of the daily expansion, even though price goes well beyond that. I am satisfied with what I got in the market today. And I also want to go over patience and confidence with your model, because there were some times where I'm sure if people were in this long, they got a little scared with the consolidation or retracement, which can cause you to not trust your model and probably exit before you should have. So I want to go over that as well. So like I've been saying on the dollar index, my bias on the weekly and monthly is bullish because we have this buy side liquidity resting and this stop run inversion fair value gap on the monthly chart and this monthly buy side. So even though last week we had this big drop down retracement taking out this sell side, I still want to see us push higher on the higher time frame charts. So with that being said, coming into today, I was looking to see some sort of manipulation in the beginning of the week against my bullish bias. So I wanted to see price run out this sell side liquidity. You see it doesn't here, but that's what I was looking for, and that's how I framed my trade on the NASDAQ. So because I am not abandoning my bearish bias on the weekly chart in NASDAQ, I am looking for some sort of manipulation to the upside before price continues lower. So with the Asian session, we have this new week opening gap higher. We had relative equal highs within this daily fair value gap, and also this bearish order block. So I wanted to see in the beginning of the week price push into this area as the manipulation before running lower. And because we had this large new week opening gap higher, I was looking for some sort of discount to be offered in here, which it was. And then you see price traded through these relative equal highs and is reaching for consequent encroachment of this suspension block. So here on the hourly chart, we have this large new week opening gap. Like I said, I was looking for price to offer some sort of discount within that. And looking to the left of the new week opening gap, we have this bullish order block, this hourly order block. And price drops down into that, leaving relative equal highs. So anyone going short will have their stops resting above these areas for price to target. And you see price trades into that order block. The bodies staying at the high while the wick does the damage. And then from there, you see we rally through all these buy side liquidity pools very quickly. And it is PM session now, and price is still continuing to deliver higher. So here on the hourly chart, we have this large new week opening gap. Like I said, I was looking for price to offer some sort of discount within that. And looking to the left of the new week opening gap, we have this bullish order block, this hourly order block. And price drops down into that, leaving relative equal highs. So anyone going short will have their stops resting above these areas for price to target. And you see price trades into that order block. The bodies staying at the high while the wick does the damage. And then from there, you see we rally through all these buy side liquidity pools very quickly. And it is PM session now, and price is still continuing to deliver higher. So looking at this move on the 5-minute chart, this is where I usually frame my trade. We have market open, price trades into this sell side liquidity from pre-market. Obviously within that hourly order block, price is doing damage to anybody trying to go short and anybody that was trying to go long off this low. And you see we almost trade into new week opening gap low. We leave a small portion open, which is a bullish signature. Once we get this nice displacement higher, market structure shift, this change in state of delivery is validated. These 3 down close candles, we use the opening price. You see price is working the upper half of that change in state of delivery. The wick does the damage, like I said, into the lower half, but the bodies are remaining above the upper quadrant. So you can trust any longs. And once the damage is done to sell side, price is targeting all these clean levels in price where buy stops are resting. So once we get the rally from the change in state of delivery on the 5-minute chart, You have a small little fair value gap created. New week opening gap high. Price finds support at that level. Rebalance to the low of that 5-minute fair value gap. And then from there, price just spools, running out all this buy side liquidity. And again, what we just hit, it's a consequent encroachment of that daily suspension block. But you see price just algorithmically spools, just continuing to reprice higher and higher. So now looking at the 1-minute chart, we have that same stop run. Right at market open, price drops down below this short-term low. And then immediately we get a strong displacement back through the short-term high. It's bullish market structure shift. We have this fair value gap created, the 2022 model fair value gap from ICT, which is in discount of this impulse swing higher after shifting market structure bullish. We also have 9:30 opening price within that fair value gap, which is also change in state of delivery because it is the last 3 down close candles right before this displacement higher and took out this liquidity over here. So once price retraces into that fair value gap, wicks into 9:30 opening, we get a nice displacement from there, and that is what I use to frame my entry. We had this propulsion block that should not be violated if price is bullish. So I entered off this fair value gap, bullish fair value gap, stop at the low of the propulsion block, and I was targeting initially London's high, which is about 2.5 RR. I just wanted to take the low-hanging fruit for this trade, and you see price, in fact, respects this bullish fair value gap, also this propulsion block, and from there price continues higher, and then you have the 950 macro starting right here, and then price spools through new week opening gap high and leaves a short-term high just below all these buy side liquidity pools we're looking to be delivered. Price goes into a short consolidation, finds discount in this bullish fair value gap, rebalance to the low, and from there price just continues reaching for buy side liquidity. And we have this breakaway gap as price trades through this short-term high, and then London high is delivered. And this is the objective I was looking for. Like I said, London's high, but I was kind of getting impatient in this trade once I saw that we were kind of consolidating. So around when price hit this short-term high, that is when I decided to close the trade and save my mental capital, because I was kind of like bouncing off the walls and scratching my head trying to stay in this trade. So I would rather save myself than catch however much more I would have made on this trade. That's just how I feel personally. Something I am working on, but I think by catching these moves and seeing it over time with confidence, then I'll be able to hold on to those trades longer. So I'll be honest with you guys, even though I was in this trade and I was able to hold through this consolidation here, I was kind of anxious in that because I didn't want price to go against me, and I had a relatively small stop loss. So once I saw price going down, it easily could have came down here and stopped me out. But I was able to trust my model and trust my bias and know that it'll deliver over time, even though if I'm not right on one specific instance, there will be a lot more times that I am correct. So you're just kind of playing the probability of your model. And if you do get into a trade like this and you exit early because you see you're in some sort of consolidation, you are just skewing your results over time. So you have to be able to execute once you see your model present itself and confidently hold that, like I did here. So that is just something I wanted to share with you guys about being able to trust yourself and trust your trading. It's only going to come from seeing it happen over and over again. There's no shortcut to it. So the only thing I could say for you is to get in front of the charts, watch it play out, know what you're looking for, and eventually you will be able to hold trades for longer. And also I'm speaking for myself, because there is a world where I could have held for these relative equal highs, but I decided to take the low-hanging fruit and get out early. So that is something we can probably work on together, you know what I'm saying? But yeah, I hope you guys enjoyed the video. Comment if you want me to go over anything more in depth. Leave a like, and I'll see y'all on the next one.